Hello traders, today is the 9th of March. My name is Double Hornsey, market analyst trading. Today I'll be looking at the euro versus the US dollar. Okay, we're sticking with the euro theme this week because this is the third consecutive London session where the euro's actually found some strength relative to all the other pairs. Australian dollar is the strongest after the RBA governor last night, and then the deputy governor this morning has spoken. It looks like we're going to get rate hikes in the near future for the Australian economy. Looking at the yen, that is the weakest currency, and that is backed up by a weak Swiss franc. So we're seeing more of a risk on day to day as commodity pairs do better than the safe havens. US dollar is also weak, and that sort of confirms that bias. Obviously, bottom left-hand corner isn't totally green and the top right-hand corner isn't totally red. We're still being moved by news headlines. And if we look at the latest headlines, we can see here that only one Ukraine evacuation route is open, despite Russian pledges. There was supposed to be 3 or 5. Oil rose to $130 as Biden moved to ban exports and also apply sanctions. So that means other companies and countries do not want to get involved in Russian goods at the moment. We are seeing the America try to ease oil prices by tapping into Venezuelan and Iranian oil. So we might see flows come in there. But the longer the war goes on, the more sort of demand destruction is probably going to be. Looking at a Forex calendar, we can see that we had European news out this morning. French final private payrolls came in pretty much as expected, just slightly better, 0.6%. Looking down, we've got Italian industrial production month over month came in a lot worse than expected. Probably going to see that happen, sort of continue like as a trend. Later on, we have US JOLTS job openings predicted to come in slightly better than previous. Based on what happened in the NFP and ADP, it looks like there's quite a lot of jobs to be had. We go down later on, we've got crude oil inventories and then a 10-year bond auction. So if we are going to go long equities, the US equities generally seem to sort of stay within a balance area until after these auctions. And then depending on which way the bonds go, we'll sort of see whether or not equities follow suit. So going to the active trade platform, I'm looking for a euro versus US dollar long today, more of a carbon copy of what happened yesterday. Yesterday, I was looking for a long in the euro versus the yen, and you can see here that the analysis was wait for the price to come back down to the breakout. So we had an imbalance at the London Open, so we'll wait for it to come back down to test that breakout around 125.6. If we go to the active trader platform, go to the actual euro versus the yen, we can see here, this green arrow is where I sort of suggested we get in. This is my take profit area here, where I said we were just going to target a balance area. So like these lows, price actually went up to the 200 period moving average on the hourly. So this trade absolutely was, worked out exactly how I hoped it would. So for the euro versus the US dollar, looking for something similar, looking for a pullback to the breakout. This is the London breakout. So it's taken out all the highs from the Asia-Pac session. It's taken out the high from yesterday. So we've cleared some liquidity above there. Now we're going to try and sort of shake any weak longs out. And to be fair, everyone should be a weak long. We've got a daily trend from the 1.13, which has obviously come down, a fair amount, good 700 pips. For me, we're going to try and maybe target towards the low of 3rd of March. So that would be, the low is 1.10327. That's where I'd look for a reversal. So I'm going to make that red and fat. I certainly don't want to trade counter trend overnight. I'll be happy just to get 30 pips today and then come back tomorrow and try again. What I'm expecting is if we get a resistance of the low of the 3rd of March, then we sort of roll back over and head back towards 1.06. If we don't get resistance there, then there's the 20 and the 50 daily EMAs, but we could push up into the 1.13 again. For those of you who've been following the videos since November, 1.13 was the sort of pivotal level. It's the most traded level over those months up until 24th of February. And the only reason this sort of broke down further is because of the escalation of aggression by Russia into Ukraine. So I'm looking for a pullback, then a bounce up to 1.103. If we go back to the hourly charts, you can see that then lines up with the hourly 200 EMA. If we do get a chance to go long, if we see a rejection of the 1.09, we go long there, then the stop's going to go below a significant swing low here. So we've got 1.087, and then the target would be up here. So we're just under, well, it's exactly 2. So a risk to reward of 2. So that's perfect. So that's the trade I'm looking for today. Carbon copy of what happened yesterday, seemed to work out yesterday. And whilst we've got a little bit of intraday euro sort of bullish sentiment, we're just going to look for pullbacks to go higher, but we're not going to marry the trade. And we're going to look to see if we get a rejection to go lower. All right, good luck, and I'll speak to you again tomorrow.